Okay. Now, I don't know the problem with the network, and everything here is full. I now need to connect with another phone, someone's phone here. I don't know the problem with network in VI here. Okay, what we're looking at is international public sector accounting standard. We're supposed to take parastatals and public enterprise, but there are application of IPSAS that we are going to be in need of in treating questions under that aspect, under that particular topic. That is why I think of picking some of those areas that are necessary to work with. We can be able to have a better understanding when we are solving questions and have a better knowledge on that aspect. As I said, we should take IPSAS first. Then when we take part of that IPSAS, when we cover those areas that are necessary, then we can come back later when we are done with the remaining part to balance off the remaining part of the IPSAS. Is that clear? Now,
I can't hear very well. The line is breaking, sir.
So this is serious.
Yeah,
Okay.
better now.
Okay. Now, as we are now looking at it, as far as the public sector accounting standard is concerned, prior to this era of IPSAS, we normally prepare the financial report in the public sector using cash basis. But due to the fact that there are issues with that particular cash basis in terms of not being realistic in line with what business and investment line, or losing of what revenue, there is no proper record of receivables as public sector accounting is concerned using cash basis. Government now look at it, there should be a better way to sort out the issue of this particular problem. In that situation, they pick up the adoption of so-called IPSAS, which is International Public Sector Accounting Standard. There are a group of organizations that are also into the use of this public sector accounting standard. Taking a perfect look at it, we have it as here, saying that formerly Public Sector Committee is a board of IFAC formed to develop and issue under its own authority International Public Sector Accounting Standard, a highly qualified global financial reporting standard for application by public sector entity other than the government business enterprise. Now, when we now look into it, what is the objective of International Public Sector Accounting Standard Board? This particular board puts together the International Public Sector Accounting Standard to serve as the public interest by developing a high-quality sector financial reporting standard for them to be able to meet up with the requirements and also carry out necessary research in keeping papers and also deals with what public sector financial reporting issues. As this particular sector is concerned, we have different set of members. We have what we call 18 members and 15 members who are nominated by members body of IFAC. But all these are not what we need to pay much more of attention to, but just to have idea of them. This enables them to develop a due process in preparing the financial report in the public sector by adopting the use of what standard. On this part, we have the following stages that we are meant to have what idea of. One, study the national accounting requirements. That's the first stage. What and what does national accounting required for us to be able to know what and what's to be recognized and what we are not meant to recognize. In view of that, we also have what consideration of the pronouncement issued by the International Accounting Standard Board. That is what that's presently called International Financial Reporting Standard, which we call what International Accounting Standard Board. We have the national standard setters, that is the regulatory bodies in Nigeria that are meant to look into the financial report prepared in the public sector and also in the private sector. Under that, we can look at it, the financial regulatory body in Nigeria. Then, aside that, we have what we call the professional accounting bodies, such as ICAN and what they call this other one, ANAN. These are the major two accounting bodies in Nigeria. Then, we look into other related issues, which we can now look at it that what is the purpose of adopting what IPSAS by the government, in which we improve the quality and comparability of the financial reports in the public sector. That is, in order to harmonize the national requirements in preparing financial reports in the public sector. These are the reasons behind the adoption of the IPSAS. Now, which will now lead us to what we call IPSAS 1. What is this particular IPSAS 1 is all about, which is preparation and presentation of financial reports in the public sector. Preparation and presentation of financial reports in the public sector. The aim of this particular IPSAS 1 is to be able to identify what are the accounting treatments, what are the components of financial reports in the public sector, which must be adopted across the three tiers of government and also across the agency in the public sector in preparing and presenting the financial reports. Now, looking at it from that particular end, the purpose of the IPSAS 1 is for preparation and presentation of financial reports in the public sector, which will enable us to be able to look at components of financial reports in the public sector. As financial report is concerned in the public sector, financial reports comprise of the following components in the public sector. 1, we have statement of financial position. We have 2, statement of financial performance. 3, statement of cash flow. 4, statement of net assets. 5, statement of accounting policy. These are the components of financial reports in the public sector. Let's look at what the material is saying. IPSAS 1, presentation of financial reports. The aims of this standard is to prescribe the format in which the general purpose financial statement should be presented so that can be compared with the financial statement of the previous period and the other entity. Now, what are the components as we have it? We have statement of what? Component of financial statement in the public sector. We have statement of financial position. We have statement of financial performance. We have statement of change in net assets. We also have cash flow statement, explanatory notes to the account, and statement of accounting policy. These are the statements that we need to look into one after the other. What do we mean by statement of financial performance? This is a statement that is prepared to determine the assets and liability of an entity. This both in the private and in the public sector, this is meant to be applied. But as public sector is concerned, financial statement is meant to be prepared in 2 ways. We have what we call the cash basis, we have what we call the accrual basis. When adopting the cash basis, when you are preparing financial statements in line with what cash basis, you are meant to prepare your financial statement of financial performance using liquid assets as the starting point. For you to prepare statement of financial position in the public sector using cash basis, you are meant to start with what? Liquid assets. But when it comes to using accrual basis, in preparing financial report using accrual basis, it simply means that your statement of financial position starts with non-current assets, which you are meant to spread the cost of the non-current assets for the years of that particular asset is meant to be used in accrual form. Now, simply means accrual basis have recognition for what? For the credit facilities, while cash basis is not make provision for credit facilities. That is statement of what? Financial what? Position. When preparing statement of financial position, starting with what? Using cash basis, you are meant to start with what? Liquid assets. But when you are preparing statement of financial position using accrual basis, you are meant to start with what? Non-current assets. You need to take note of that. And when you are seeing a question saying they adopt the cash basis, you notice that you are meant to start with what? Liquid assets. If you otherwise prepare it in another way around, it will be marked down. That's first phase. The second phase, then how does it look like? It comprises of what we call the asset. We have what we call what? The liability. Now, under that asset is divided into two. We have what we call non-current assets. We have what we call current assets. Under the liability, we have what we call non-current liability. We have current liability, and we have what we call fund and reserve. In the public sector, we have the fund and reserve first, we have the non-current asset follow, and we have what we call current asset. But let's see what the material is also saying as this is concerned. Information to be presented on the face of statement of financial position. We have what we call property, plant, and equipment. We have investment. We have intangible assets. We have financial assets. We have investment accounted for. We have inventory, recoverable, this and that. All these are referred to the what? Assets part. Then the second one, and also take into consideration the liability that are meant to be recognized. But as we are not new in the financial statement, in the accounting system, the format will still be used as we are going. Then the second phase is what? Statement of financial performance. This is statement of income and expenditure. It's a statement of what? Income and expenditure. It's a statement prepared to account for the revenue generated in the public sector and the expenditure incurred in the course of carried out the government activities or operations. Now, under this one, we also have the revenue, we have the finance cost, we have the surplus and delight. The expenditure incurred, everything are meant to be stated in this part, which is what we refer to as a statement of financial performance. It's a statement prepared to account for the income or the revenue generated by the government and expenditure incurred in the course of carrying out the government activity. Now, what are the things we also need to have idea of? We pick an example for you to have idea of what is statement of financial positions look like. Look at it. We have the assets. That asset, look at what we're saying. Start with what? Cash and cash equivalent. They prepare this in line with what? Cash basis. This is prepared in line with what? Cash basis. Why? If we are to start with non-current assets, that means we have adopted accrual basis. And if you look at the liability, we have the current liability, we have the long term, and when we talk of what? Net assets or equivalent, we have what we call the capital contributed by other governments or reserve and the like. This is how it's meant to look like. When it comes to statement of financial performance, look at it. We have what we call operating revenue. That is the revenue generated by the government, which we have total revenue, and we have what we call total operating expenditure in this format. Then we also have where the government also invests in other parastatals or other organizations. That is where you are going to see non-controllable share and controllable share or delight. But as this one is concerned, we consider the operating expenses and consider the revenue. The difference between that, we are going to have what we call the surplus or deficit. That is where the revenue is higher than the expenditure, we have surplus. Where the expenditure is higher than the revenue, we have what we call deficit. Then under that, we can bring on board what we call the finance cost, gain on sales of properties, that is other related incomes. Then those ones are also meant to be recognized as part of what? Income. But in the private sector, they call it what? In the private sector, they call it statement of what? Profit or loss and comprehensive income. But in the public sector, we refer it as statement of financial performance. Then we also have what they call the minority interest and the majority what interest. But as we are going, we discuss that in the future. Any question? Now, aside that, we also have what we call statement of cash flow. Cash flow statement. This is another statement that is meant to be prepared. Cash flow statement is a statement to be prepared in order to determine the total receipts and the total payment of government in the public work sector. That is the total inflow and the total outflow of cash. There's a topic on its own which we are going to look at as we are going. Exactly. Then the second one that we also need to look into is a statement of net assets. That is, in the private sector, they call it statement of what? Change in equity. But this one is a statement of what? Statement of change in net assets, which is meant to account for the what? The sources of funds in the public sector and the likely revenue, surplus or deficit that the government is having at the end of the financial period. That is what that aspect of net assets is recognizing, where we compare the total revenue, we compare the total assets of the company, of the entity or the government, together with the total liability. Anything you have left is what we call net assets in the public sector. Another statement we also need to look into is a statement of accounting policy. Statement of accounting policy. This is a statement prepared in order to determine prior year adjustment, the budgetary estimate, and its end of the year adjustment, and the accounting policy principles concept being adopted in preparing the financial report. In terms of the accounting method, what are the methods you have adopted in preparing the financial report? Is it cash or the basis you have used to adopt in preparing your financial report? In terms of cash basis or accrual basis, in terms of the what? Item recognition in the financial statement. How do you recognize your revenue? How do you recognize your expenditure? Is it capital intensive, or is it capital in nature, or it is what? Recurrent expenditure. Depending on the policy you are put in place, that will analyze to us what you have adopted in preparing your financial report. Aside that, we also look at it from another angle. What are we looking at? We are looking at it from the what? Prior year adjustment. In the course of preparing what? The previous year account, you made some what? Maybe some errors were being committed, and in the process, in the current year, you are meant to do the necessary adjustment before you move forward to the next level. And if there is a budgetary estimate you also put in place, and the application of the budgetary estimate you have also adopted in preparing your financial report, you also account for that. All these are what we refer to as statement of accounting policy. The accounting method you have adopted in preparing your report, all these are meant to be stated. You are meant to disclose all these what? Information in the statement of accounting policy. In terms of what? The depreciation method, depreciation rate, the cost of your assets. How do you recognize the cost of your assets? At what point do you recognize residual value of the asset? At what point do you think this asset is meant to last for in terms of the useful life of the asset? All these are meant to be stated deeply in the statement of in the statement of what? Accounting policy. And what is the policy of that parastatus being adopted in preparing the financial report? All these are what we refer to as statement of accounting policy. Aside that, we also have what we call explanatory notes to the account. Explanatory notes to the account. Explanatory notes to the account refers to be the note that can be used to generate the figures to be used in the financial report. Figures to be used in the financial report. That is, the financial figure, the financial report you are preparing also need to look into saying that what figure are you meant to recognize in your financial report? What are the addition of revenue that make up the total revenue you want to report in your financial report? You are going to see that in the note. What make up your cost of sales or cost of service? All those ones, they are also referred to as the cost of sales, depending on the nature of the service. Aside that, we also look at it from another area in terms of what? The expenses or the expenditure to be incurred by accounting for what is the total expenses in terms of the what? Non-current what? Assets. In terms of depreciation, how do you come up with your depreciation? All these are meant to appear in the note in line with what? IPSAS 17. In terms of lease square method, what do you call it? Lease agreement. How do you recognize your revenue? How do you recognize the interest? All this is in line with what? IPSAS what? 13, which we are going to look into that in the future. These are the statements to be prepared when it comes to public sector accounting standard, international public sector accounting standard 1. Any question? Hello?
Yes, sir.
Do we have any question before we move down to the next one?
Okay, sorry, sir. I want to ask this. I thought initially you wanted to take chapter 12.
Yes, which is parastatals.
Yes, sir.
Yes, but we need some applications of
Okay, I understand.
IPSAS in that. That's
All
why I
right.
said let me just take those IPSAS and come back to that.
All right.
Is that
Okay, sir.
correct?
Thank you, sir.
Okay. You are welcome.
Yes, sir. Thank you, sir.
You are welcome. The next statement now, the next standard we are looking at is what we call IPSAS 2, which is cash flow statement. IPSAS 2, cash flow statement. Cash flow statement is a statement prepared in order to determine the receipt and the payment in the receipt and payment of government in the public sector. This standard is required the presentation of the information regarding the historical changes in the cash and cash equivalents. What are the likely changes in the cash and cash equivalent? Where you operate, your operation, is it on cash basis or accrual basis? How are you meant to account for the cash items in your account? How do you work towards it to make sure that you work towards from the what? From the income statement down to your cash and cash equivalents. That is the cash and bank balances. Now, this particular statement is basically meant to be prepared in order for you to be able to account for what are the total receipts, what are the total what? Expenditure. Comparability between the two will give you cash and cash equivalents. And on this part, we also need to have idea of what are the components of cash flow statement. There are 3 components of cash flow statement. We have what we call operating activity, we have what we call investing activity, and we have what we call financing activity. When it comes to operating activities, this relates to the inflow and outflow, that is the receipt and payment of cash regarding what? The activity of the what? Of the government in terms of the revenue generated recurrently and in terms of expenditure to be incurred concurrently. Now, looking at it from that particular part, across the 3 tiers of government, they are also meant to prepare cash flow statements. And before that, we also move forward to that cash flow statement. In the public sector, All the three tiers of government are also meant to prepare financial reports. At the federal level, they are also meant to prepare the financial report in which their statement must go along with what? International public sector accounting standard. But there is a slight difference in the statement. That statement of financial performance, what do we refer that to at the federal, state, and local government level? At the parastatal or public enterprise, they refer that as what? Statement of financial performance. But across the three tiers of government, there is a name attached to that separately, which is the same thing with statement of financial performance. The statement of consolidated revenue fund, that is the name they called what? Statement of financial performance at the federal and the state level. While at the local government level, that statement of financial performance is called what? Statement of income and expenditure. But it means the same thing. Now, also from there, we can also look at it that we said we have three components of cash flow statement. Three components of cash flow statement. We have operating activity. We have two. We have what we call investing activity. And three, we have financing activity. Now, when we look at it from the operating activities, we are looking at the aspect of the cash flow that relates to the receipt and payment, or cash inflow and cash outflow in terms of the government operations. The operating activity under the public sector, government are meant to generate revenue. That revenue are referred to as the receipts in that particular operating activity. The revenue generated either at the state level, federal, or local government level. That revenue, when we are looking at it, how does that money flow into the organization? We refer it as the receipt. Where we have under that, we have what we call statutory allocation from the federation account. Apart from that, we have taxation, we have fines, we have court fines, we have what we call licenses, we have what we call rent received by government for the quarters and thereabouts. All these we have what we call payee tax. All these are meant to be added together as cash inflow under the operating activities, because they are meant to occur on a yearly basis, including the recurrent grants, including what we call subvention. Government can give us subvention, what we call PSAF fee, medical fee. All those ones, they are inflow. But when we look at it from another dimension, in terms of expenditure, that refers to as the total payments made out by the government in the public sector across the three tiers of government and other parastatals. Now, from that particular point, we can say categorically that what are the likely payments to be carried out under the operating? We have one. We have what we call personal emolument or salary. We have pension. We have gratuity. We have administrative cost. We have other overhead or charges. All these are referred to as outflow. When we also look at it to another dimension, which is investing activity. Now, this also relates to the receipts and payments, or cash inflow or cash outflow on the financing activity in terms of asset acquisition, asset disposal, investment disposal, investment acquisition, or return on an investment. All these are referred to as cash out. All these are referred to as investing activity and the inflow and outflow across that point. Another aspect that we also need to look at is what we refer to as financing activity, which has to do with what the source of finance in the public sector to the government and also the repayment of the finance. Now, under this part, we also consider the both inflow and outflow, and we take into consideration what we call the loan receipt, loan repayment. Apart from that, we also talk of loan issue. Government can also give out loan to some other organization or another tiers of government. Aside that, we also have what we call interest received. We also have what we call interest paid, depending on how the structure of that particular questions look like. That determines where you are meant to categorize those things. Then under this so-called IPSAS 2, there are two methods of solving or preparing cash flow statement. We have what we call the direct method and we have what we call indirect method. If you are using direct method, you are using cash basis. If you are using direct method, you are using cash basis, in which the cash items are also meant to be recognized in that direction. And you are not meant to compare the 2 years, but only the cash entries or cash transactions are meant to be accounted for in the cash flow statement. When you receive cash or when payment of cash is being taken care of, that is when you account for that. Then, but when it comes to accrual basis, that is when you are adopting the system of the indirect method. Indirect method is the application of accrual basis in preparing the financial report. And in that scenario, you are meant to compare the 2 years to determine the difference between the years in order for you to account for the receipts and payment in the cash flow statement. Now, let's look at what the note is referring to or is talking about. Now, cash flow statement now. The standard requires the preparation of information regarding the historical changes in the cash and cash equivalent of the entity by preparing the cash flow statement. The statement classifies the periodic cash flow into operating, investing, and what? Finance. That is the activity we are referring to. Now, when it comes to this, we have classification of cash flow by activity. Now, look at what we are saying. I've made mention of all this, but let me also go through for you to have an idea of them. Cash flow from operating activity in the public sector entity are indicators of the extent to which entity is financed by tax, sales of goods or services. Examples of such are cash received from tax, levy or fines, cash received from sales or provision for service. We also have cash received from grants. Talk about it, but this type of grant is referred to as what? The current grant or transfer and other appropriations. We also have cash payment to supplier. We have cash payment to public entity, cash received from royalties, commission and other revenue. Payment on behalf of employee, that is all these training, salaries, development, all those ones. They are one we refer to as what? Operating activity. But when it comes to what? Operations, look at the way it is. This relates to the what? Resources that are intending to be contributed to contribute to the entity's future, such as what? We talk of what? Cash payment on assets, what? On acquisition of property, plant and equipment, intangible assets, that's investment. Then payment relating to capitalized development fund and self-construction plant and equipment. We also have what? Cash received from the sales or disposal of what? Of assets or investment. Then we also have what? Payment for acquisition of equity or debt instrument. All these are referred to as what? Investment. Then we also have the finance. Under that finance, we can talk in terms of loan, which is what we have looked into before. We talk of the provider of what? Capital entity. We talk of what? Debenture issue, loan received by the government, loan notes, bond, mortgage, short terms and long term borrowings. We also have what? Repayments, which we have made mention of. We also have what? Lease. All these are referred to as what? Please, any question on that part first and foremost before we move to the next one? Please, any question? Hello?
Yes, sir. Maybe no question.
Okay. Now, you also now need to pay attention to some likely changes in the process that will also help you. Now, they said note here, public sector entities are required to report separately all major classes of gross cash receipts or gross cash payments arising from the investment financing unless the standard expressly permits reporting cash flow on the net basis in accordance with what? IS2. Now, what we're trying to say to you here is that when cash flow from transaction in foreign currency are recorded in the what? In the entity's functional currency by applying the foreign currency amount and the exchange what? Rate between the functional currency and the foreign currency at that particular date. There's a way we do the accounting for that. Now, you also need to have idea of this especially when you are preparing budget or you are preparing an account that has to do with what? Subsidiaries and parents, holding company, in terms of the majority share and minority shares. When we prepare consolidated revenue fund, when we prepare consolidated account, all this we also need to look at it. What is the currency basis of preparing your reports? Then is it functional or the foreign currency you have adopted? How do you work around it for you to be able to have what? Whether you have what we call foreign exchange gain or loss. That one will also be treated as part of what? Cash flow and cash outflow, where there is exchange rate in what you are doing. We also have cash flow from the interest and dividend received, paid or disclosed separately. You also meant to account for this one, either under the what? Operating, investing or finance is allowed. Do you understand? But there is a way I always help the students out under this part. When we talk of anything relating to finance, I said they should put it under what? Under such as what? Finance cost or interest paid. That one should be put under what? Finance. But when it comes to dividend, or you bought you invested in another organization and they declare what? Dividend for you. You can put that under what? Investment. Return on what? Investment. Since investment falls under what? Investment activity. But anything relating to loan repayment, interest on loan received, interest on loan what? Paid, then that one should be taken care of under financing activity. Any question? Now, I said we have method of what? Of preparing cash flow. We have direct method. Now look at it under the direct method. I stated it there. I prepared it also for you, the format. Look at it. The statutory allocation, tax revenue, finance, penalties, VAT allocation, subvention, current grant, miscellaneous income. You have your total. Then, when it comes to payment, we have personnel emolument, administrative costs, pension, and other miscellaneous expenses. Then, when we now deduct that from this, we call it what? Net cash flow from operating activity. Net cash flow from the operating activity. Then the next one, we also have cash flow from investing activity. Under this one, we have what? Non-current asset purchase. When you purchase non-current asset, you put it in bracket. That is what? Then proceed on non-current asset disposal. That is cash you received or earned on the asset you disposed. That is what we refer to proceed on non-current asset disposal. We also have what we call investment acquisition. When you acquire an investment, proceed on investment, return on investment. That return on investment could be received or paid. Then addition of all this will also give you what? Net cash flow from investing activity. Now, after that, we move to that what? Finance. Under the finance, we have what we call loan what? Received. We have loan issue. We also have loan repayment. We have overdraft. We also have what we call interest received. We have interest paid. Then we have what we call capital grant received. All these and capital grant issued. When you now compare all this, we also refer it as what? Net cash flow from financing activity. When we now add what? Net cash flow from operating activities plus net cash flow from investing activity plus net cash flow from financing activity, it gives us cash and cash equivalent at that particular period of time. We now bring on board cash and cash equivalent for last year, that is previous year. When we add it to this, then what we are going to get is cash and cash equivalent at the end of the current year. This is how to prepare direct method using cash flow. Any question? Hello?
Yes, sir.
Should we continue?
Yes, sir.
Now, the second method, which is what do you call it? Indirect method. That one take into consideration you are working from the income, either surplus or deficit, to be able to determine your cash and cash equivalent at that particular period of time. Then how do we account for that? The first thing we are going to consider as what? Cash flow from operating activity. We have what we call surplus or deficit in our income statement or statement of income statement or statement of financial performance. Anything you have there will be recognized as your surplus or deficit. You will now give account of the following. How do you give account? It said add or deduct non-cash items. Cash or deduct of non-cash items. What are the things? Non-cash items are those things that does not involve movement of cash. They are the items that does not involve what? Cash movement. Now, such as what? Depreciation, profit on disposal of assets, loss on disposal of assets, provision of bad debt, provision for loss or bad debt. All these are what we refer to as non-cash items. Then we add it to that. We now consider what we call change in current items, that is current asset items and current liability. What are the changes? We said changes, increase or decrease in the inventory, increase or decrease in receivable, increase or decrease in repayment, increase or decrease in payable. Now, looking at this, increase means you have what? You have acquired things on credit. Increase in inventory, you have acquired things on credit, but you have not paid compared to the previous year. The difference is what we refer to as what? Changes in what? In inventory. If it is
We can't
increase,
hear that side though. The line is breaking, sir.
okay. Can you hear me now?
Yes.
Yeah. Now, if it is increase in inventory, what we consider there is that we are going to increase will be deducted. That is, there is what they have acquired on. They have acquired more inventory or they have purchased more inventory. Then, with its decrease, we are going to what? To add. Increase you deduct, while decrease you are meant to add. Then the next one is what? Increase or decrease in receivable. Increase or decrease in receivable. Now, the receivable we're referring to, we are talking of what? Those who are owing us money. You sold goods to them on credit, they've not paid. Compared to what you have last year, that will give you your changes in what? Receivables. Then you are meant to give account of that. Then we also have what we call prepayment. We have prepayment, that is increase or decrease in prepayment of an asset. Increase or decrease in prepayment, that is you make payment in advance. It could be increase, it could be decrease in this year. If last year is higher, this year is lower, it means that there is what? Reduction. That is decrease in prepayment. Then we also have what? Payables. We also consider that the way we have considered other ones. Why increase in payable will be added, why decrease in payables will be deducted. That is what we refer to as changes in equity. Then we also have that added to the amount we have here, that will now give us what? Changes, net cash flow from operating activity. Then the next one is what? Cash flow from investing activity. Now, to consider assets purchased or acquired. We also have disposal of assets, investment acquisition, proceed on investment disposed, then return on an investment. We add them together. Anything we have is what we refer to as what? Net cash flow. Are we together?
Yes, sir.
Now, under finance, we have what we call loan receipts, we have loan issue, we have loan repayment, we have overdraft, we have what we call interest received, interest paid, capital grant issue. All these are also meant to be added together. That will now give us what? Net cash flow from financing activity. Now, when we now add what? The three, the net of the three, that is the one on this one, in terms of what? The operating, we also determine the closing. We have the net cash flow from operating plus net cash flow from investing activity and net cash flow from financing activity. That will give us what we call cash and cash equivalent at this particular period. Then cash and cash equivalent as for our last period, we also add it to this one. You now get net cash flow. You now get cash and cash equivalent as at the closing time. Any question? Any question, please? Hello, any question?
Yes, sir. So, what's the difference between that interest paid and interest received? Because one is interest received is added while interest paid is subtracted. So, I just want to understand that.
Now, government gave out loan to some other organization or another tiers of government, and they are meant to pay interest on that loan. That is interest received. The one that government also government took loan from other nations or other organizations. Then the interest they are paying on the loan they have taken, that is what we refer to as what interest paid.
Okay. Thank you, sir.
You're welcome. Any other question?
Is it possible for us to solve a question on this?
Any other question, please?
So,
Hello?
I'm asking, is it possible for us to solve a question on this cash flow?
Yes, we solve questions. Serious
Oh,
questions.
okay.
Plenty, papa. We solve questions. Plenty ones. Any other question? Due to the time constraint and the time factor, because the network really delay us today. Others, hope we don't have any questions relating to the cash flow. Hello? By the time we start
No,
solving
sir.
questions, it won't be an issue. That's why I'm asking now. Because we are meant to see a lot of things that is not even relating to what you have idea of in financial reports, that you have idea of how to prepare the cash flow. Fine, we are having the same components, we are having the same direction, but one thing we also have, the terminologies we are going to be using are different.
Okay, sir. But please don't let us start solving questions today.
No problem. I'm not solving questions today.
All right, thank you, sir.
Our question is going to be next week by the grace of God.
So we need to read very well and understand better so that when we are all solving questions, we'll just be flowing with you. Help us send this contact the class. Thank you.
I will send it. I will send it. Any other question from another person? Okay. By the grace of Almighty God, we look into IPSAS 3 in our next class, and IPSAS 13, likewise IPSAS 17 in our next class. Then we now pick the question one after the other and be solving them. Is it clear?
Yes, sir.
Okay. Yeah, because of your time and our people here are also waiting for me for physical class now. We pray that we should be able to have a better handing over in our next class with all this network issue. But I will also employ you, all of you, take your time to study the format very well. It will go long way if you can have a better understanding of the format, then it will also help you. If you have any challenges, you can throw the challenges at me, then you can also see how it's meant to go. Is that clear?
Yes, sir. Thank you, sir.
Okay. Absent of no question, we look into what IPSAS 3 in our next class and what are the disclosure we are also meant to have. But I'm not the one taking changes in foreign exchange. It's meant to be handled by Mr. Idris. Is that clear? Is that
Yes,
clear?
sir.
I will have preferred to discuss that, but the inventory also will handle by Mr. Idris. But if he is unable to capture those ones, I can still come back and have a discussion on that with you. But I will discuss IPSAS 13 and IPSAS 17 in our next class. Thank you very much for part of this class. I really appreciate your
Thank you
Thank you,
very
sir.
much.
Thank you.
Thank you.